following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And still in Hong Kong here. Looking forward to getting back to the U.S. soon, but still on the road. We're going to take a look immediately at the S&P 500. We're going to take a look at the S&P 500 futures contract. We're still looking at March here. And what I want to do here is show our daily chart. We're going to take a look at our breadth situation. We're just going to start focusing on this immediately, folks. And let's see. Just making sure we got everything together. I'm at a different spot. Here we go. As we look at this, and you know, we talked about getting this close above our 1898.30, the top of our profile on our daily, coming back and looking for that powerful retest, while at the same time keeping our eye on the breadth situation. We reached a low 1898.50. That unfair high is at 1898.30. So I'm going to call that pretty much to the tick on that. And that's the pullback after the kind of breakout you always look for when you're looking for a high probability setup. And, you know, when this type of scenario sets up, I mean, these are, you know, not the ones that you back the truck up on, but they're high probability trades. They're usually something you can a lot of times tighten up the stops around these types of situations and hopefully get a really good risk reward on the table. As you can see, you know, we had lower lows in the S&Ps, we had that higher low in Navigator, and then, you know, we had that yellow peelback happening within the scanner, new profile attempting to appear. Then we had the profile. And then we talked about it at bare minimum being able to explore this fair auction. Well, that happened. We broke out. Now we've got the retest. And, you know, we were talking about the longer this thing spins around above this particular profile, the more chance it's going to have to do this type of action, this launching pad type scenario. And that's exactly what happened. So, you know, what do you do now? That's the big question. I'm going to go back and kind of circle the globe a little bit here first and try to get a relative kind of sense of what's going on here to put some more of the pieces together this morning. And Larry, to answer your question, I'm staying in Hong Kong Park right now. I'm not staying in a hotel. There's a pretty spacious tent. It's a pup tent, an old Army tent that somebody gave me while I was here. That's where I'm staying right now. So I'm just kidding. I'm staying at a really neat little place by Hong Kong Park called Garden View Hotel. It's a favorite place for me to stay, actually. Okay, so as we look at this, we're going to take a look at the Shanghai action. We're going to take a look at the dollar. We're going to take a look at the notes. We're going to take a look at gold. We're going to take a look at crude oil. And let's just go right into crude oil, because this has been something that we've, really been kind of pounding the desk about, that the stake might be in the ground on this particular instrument. And you can also just look at this 29.26 area as something to hang your hat on as far as leaning against to stay long, or to look at this from a stop-oriented type inflection point. And I did a little Bloomberg brief on this. I showed you guys last week what the premise of that argument was. Again, Navigator higher highs, lower lows on higher lows on Navigator, lower lows on crude oil in general, and then a lot of fundamental bearish news out there. And some indications, the Canadian dollar, the ruble, the XLE, and some of the things that were kind of winding up to possibly cause us to believe that it was okay to finally start nibbling on the long side with this. So 29.26, again, stops oriented below there. I'm still looking for this to rally at least up into 34.82. It's not going to happen in one day, folks, so keep that in mind. But, that being said, the market likes oil not continuing to cave in for sure. Another indication here, we're looking at the April contract on gold here. This is kind of not cool here for longs on gold. I'll tell you that. Let's just look at this. What does this mean? And we're going to take a look at our scanner. We're going to go right into our futures section. And as we look at this, we're going to take a look at gold here. You see that yellow peel back happening finally on that gold contract on our weekly. That means that we're more than likely, I know it's the beginning of the week here, but we're more than likely looking at putting in a new supply area up top. And that's not exactly that good for longs here. In addition to looking at our daily, we caught a bid off of this area before, but when you see these things kind of really ratchet back down pretty quickly into that bounce area, this is again not the rosiest scenario for gold. I'll just tell you just by looking at those two things alone. So as we look at this, what do you do with it now? We talked about the S&Ps. What do you do with it now? I'm continuing to look to buy support on the S&Ps, but I'm looking for, if we can get back down below 1,200 on gold, that's going to be something to pay attention to, and I'm going to be looking at trading that down to 1167, believe it or not. So that's the way I'm looking at gold, and we're trying to, again, put a couple things together pre-market here. I was going to go back to the S&Ps ultimately and talk about how do you look at that action that's happened recently, and how do you deal with it in the current time zone or time frame. So here's the note bond situation. We really had a chance to catch a decent bid the other day by kind of putting some things together like we're doing this morning. The utilities with the situation in the bonds kind of ratcheting up again, the notes, taking a look at the S&Ps a little bit, being a little bit overextended and pulling back to that 1898. Talked about that beforehand. But right now, how do you factor in notes? I mean, I'm looking at notes. This is kind of a really, really scary situation for shorts. 130.04 is going to continue to be support there, and I think we, with the market doing a moonshot like it is, and then notes not really wanting to back off, this is not boding well for shorts, put it that way. So I'm still looking at kind of a buy support situation. The only thing that conflicts with that, again, is looking at this, really staring it right in the face of a new profile attempting to appear on the 10-year on the long-term weekly. But again, I'm kind of looking at that relationship with the S&Ps right now more than that. Today's Monday. Anything can happen with those yellow peelbacks, so keep that in mind. It's all about the British pound this morning, too. We're going to take a look at that. I mean, the dollar's just been losing its mind on the upside here. Let's just kind of take a look at the situation with the dollar. But I want to kind of, you guys to take note of this. We're going to talk about this when we come back, but the dollar's reached this 97.60 area on the weekly unfair lows and also come right into that 97.50 area on the daily unfair highs. So we'll be right back, guys. I think we're going to have Steve Dahl with us from New York on the phone.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And we were kind of talking about circling the wagons on a couple of the instruments that might affect the S&Ps. We're trying to finish up with the dollar here, but I think we've got a caller. Steve, are you there, buddy?
I am here, John. I'm here live in New York City in Times Square for the Traders Expo here. I'm excited. We'll be talking a little bit later this morning, and I think I'm going to see some of our good friends at TFNN very shortly here later this morning after a good cup of coffee, of course.
Yeah, you might see the captain, Tom O'Brien, and Tommy up there, huh?
I think so. I'll be on the lookout. Cool.
Well, listen, man, I mean, what's it like up there? What are you expecting at the show? I mean, give me the rundown on what's happening today.
Absolutely. Boy, there's a lot of buzz around here, a lot of enthusiasm. I'll tell you what, I was at the lounge after dinner last night at the hotel. A lot of traders, a lot of investors kind of out there looking for answers, and it was kind of interesting for me to sit there and be a mouse in the corner and listen to some of the folks talking about, where they're looking for opportunities and some of the challenges that they're having already this year. So I just kind of sit there in the background and listen because it's good fodder for me talking later today. But it's busy. No shortage of traffic on my way in here. I think I ended up walking the last 2 blocks to the hotel here at the Marriott Marquis because I missed 7 lights in a row just sitting in the back of a cab as the meter was running, of course, in New York City fashion. So I said, that'll do it. Pop the trunk, folks. I'll walk from here. So
isn't it amazing? I mean, you go to that city and you end up paying more for a taxi across town than the whole flight.
That is absolutely true. Or if you order room service, I'm finding out as well.
Yes, we've done that before. I remember those days. I'm just glad you're staying in a hotel this time instead of a tent.
Yeah. Normally, I'm not opposed to it. Being a Minnesota boy by nature, I'm not opposed to pitching a tent just about anywhere and calling that as long as there's some internet for us to still get on and do our thing, John. I'm all for it. Let's do it. Let's get up to the North Woods and do some trading on the lake.
Hey, so coming out of Chicago, and I know that you had generally been following commodities, and coming out of the Board of Trade and the CME, like a lot of the time you've done up there. Where the heck is gold going? Do you have any thoughts on that? Because we've got kind of a little bit of a reversal going on here. I thought we, might climb higher. What's your thoughts on gold in general?
In general, I'll tell you, you know, John, that we have deep ties on LaSalle Street in Chicago at the commodities exchanges. And in fact, I was visiting with a couple of our loyal trading firms that we do business with at the enterprise level just last week. And as it relates to the yellow metal, this is an interesting trade. And John, you and I both know handsomely and graciously we have been able to capture some of that upside move in the last week at different times in small doses. But I think it's my personal opinion, that's all I can give you here from New York City, is I'm cautiously bullish for a combination of fundamental and technical reasons. But I think there's still good reason to have concern about the world around us. I don't think we've got this thing figured out domestically and certainly not internationally. Throw in an election year curveball, and I think we're gonna have some volatility. I'm a vol trader, so as long as it's moving, I'm a happy camper. If it goes flatline, that's when I go take sabbatical.
Gotcha, man. I mean, there's so many things up in the air right now. You're right about that, and you spoke about Trump for a little bit there. That's just, man. God, who knows? God, who knows what'll happen?
It's a scary world we live in, John. You and I both know that. All you can do is arm yourself with information, and you kind of realize that. You and I sit in maybe a kind of a unique spot, John, with the people we have the opportunity to talk to, even our loyal users at TFNN, and there's a lot of concern at the kind of the grassroots level, in the trenches, all the way up to the hedge funds that we talk to on a weekly basis. There's a lot of concern. So it's kind of like, everyone thinks somebody else knows more than the other guy, and in reality, that's why so important to have some objectivity based in some technicals, because that kind of trying to guess what the report's going to say, or guess what they're going to say every time they get in front of the podium, and what the Fed's going to do with rates, and should I buy real estate now, should I refinance some investment properties? Who knows, folks? You just have to know the one sure thing you need to take to the bank is that you can't predict the future, but you can be prepared for the future. And I think that's a good lasting message that everyone should live by.
Yeah, I totally just spot on. But let me tell you something over here. I have a chance to watch TV periodically, and there's, nobody over here trades on fundamentals whatsoever, because they kind of they understand they can't trust any fundamentals coming out of China, So everybody trades on technicals, and there's shows like, TV shows galore on basically how to read technical analysis and try to make sense of the charts. Not that they're giving great information, but it's just really wild how, nobody, if a company comes out with a report over here, nobody pays attention to it whatsoever. It's all technicals.
You are exactly right. I think the obsession with the story is really something here in the U.S., I'd say, or at least North America. I don't know what that is. Maybe it's kind of the ego that drives wanting to sound smart. When you're cutting the lawn in the summer, saying that you knew the story about why a stock went high or something. But you're right. Overseas, especially where you are there, John, technicals galore. Here's a kind of an interesting analogy that I like to tell folks in some of our live training venues. I say, technical analysis is really a broad topic. Simple moving averages technical analysis, taking some of the off-the-shelf stuff that's on, built in every single platform as technical analysis. Take yourself back to when you're about 8-9 years old. Remember going to the go-kart place for the first time, and you're all excited to say, I'm going to hit the gas, better than everybody else. I'm going to win this race at the go-kart, and instead you realize everyone's throttle is at the same spot, so you actually can't get ahead. You know what I'm talking about. It's tough. Tough. There's no edge if you're jumping in a go-kart that has the same throttle limitation. So that's obviously why you're doing the good work that you are, John, to tell folks that they can kind of unleash that throttle and maybe have a few extra gears that they can put on to get an advantage on their technical side.
I'm kind of having a moment right now after you said that, because nobody ever took me to the go-kart track, Steve.
Sorry to rehash some bad childhood memories there, or I should say lack of memories.
So everything just everything just kind of caved in right then when you were talking. I don't know.
Oh, I love your dear mother. I love her to death. Don't you dare say one bad thing about her. You're spoiled rotten in many other ways that I wish I was, quite frankly. You've been out there being able to live in the country and breathe some fresh air, and I'm living in suburban Chicago, still breathing the smog off the lake. So I think you got it made in many respects. Don't sell yourself short. But I'll take you to the go-kart range next time when we get together.
Thanks, man.
A couple of grown men in suits in the go-karts, and we still are going to have our throttle limited there. So
well, listen,
maybe we can Tazify the go-karts.
I don't know if I properly introduced you. Steve Dahl is a partner of mine up in Chicago, and he's at the Traders Expo in New York, and I think he's going to be bumping into Tom and Tommy up there. And Steve, I really appreciate you coming on, man. It sounds like you're going to have a good day.
Yeah, it's going to be busy. Thanks, John, for having me, and so long, everybody. Let's keep in touch.
All right, buddy. Thanks very much. We'll be right back, guys. We're going to have Joey Jong from Hong Kong here on with us.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Thanks, Steve Dahl, for coming on. It was awesome to talk to him. I think we've got another caller. Joey, are you on with us now?
Yep, I'm on. How are you doing, John?
Hey, man. Long time no see. We're seems like I just saw you hours ago.
That's right. Welcome to Hong Kong.
Joey is a guys. Joey is one of the well-respected institutional traders around Hong Kong, and he had a pretty big operation, sold it, kind of punched out of that a year or so ago, and he's now in the Cyberport facility, which is where I've been camped out with him, and he's a serial entrepreneur, and we're actually focused on some new things on the trading scene, he and I. So, Joey, it's good to have you on, man.
It's great to be here.
Hey,
thanks for having me on.
Yeah, man. What's on your mind today? What can you share with some of the listeners that don't normally get to hear from the side of the street over here? What's something? Yeah.
Well, a few big things on the tape. I think Europe is overall weaker because of the British pound and Brexit. Talk of Britain exiting. And so that's dragged down the euro. I think that's actually giving some strength to the dollar overall across the board. The dollar had a little bit of pullback, and now we're seeing the dollar kind of reassert itself. I don't know if this is going to be temporary or or it's still just going to be. The dollar should consolidate a little bit more, I think. But if you look at the dollar yen. The yen has strengthened quite a bit over the last couple of weeks, and that's caused the Nikkei to drop a lot. But the yen hit a support of 112.50, and that's a pretty strong support on the charts, on the TAS bars as well. So that's one thing to watch out for. The other thing is, with any time you have talk about, Britain exiting or Greece exiting or anybody exiting, then you have gold reasserting itself. So gold, just a few hours ago, hit the 1201 daily TAS bar support level, and it's bounced straight off of there. It's at 1214 now, so that was an excellent support level to watch on our on the TAS bars.
Right.
And
you know what concerns me. I mean, if you don't mind me interjecting right now, you know what concerns me about that. I mean, it's held in an awesome way, and we've actually caught some bids off of that, waiting for that pullback, and then getting a little bit of a launch there. But what do you think about the way it's? Is this just, in your opinion, kind of a consolidation above this profile? Because in my opinion, with this Brexit or whatever they're calling it now, and then the British pound getting hammered today, should it be acting a little bit better than this? Is this concerning at all? Like gold.
Gold is down 1.5% today, but it was down a lot more. And I think, I think it's because it's had such a strong move from basically the breakout was at about 1120 to 1130 level. So we basically traveled 100 points up in a straight line almost. And so it's very normal for it to pull back a little bit here. And have a bit of a consolidation. So I do expect this to go stronger, and I think you're going to get some resistance up at the 1230 to 1240, 1235 to 1240 level, and it's going to be tough to break through there. But if there's more talk about Brexit, and actually if you, I was just looking at some of the other, we haven't heard about Spain and Greece. And Italy, the pigs markets. We haven't heard about the pigs markets for a while, but if you actually watch those sovereign bonds, they are widening again. I think to a 2-year high against the against the German bonds. So we're probably gonna get more talk about that as we go forward. So I would still be, a buyer of gold at these levels.
Right. All right. Well, can we switch gears? That's a great dissertation on gold. Thank you so much. Can we switch to the S&Ps?
Yeah, absolutely. So, the S&Ps, I think it's really about sector rotation on the S&Ps. The S&Ps have been outperforming the Euro stocks and the DAX.
No
Obviously,
doubt. That's why I've been I personally, you and I talk about this all the time. I've been personally looking at that as kind of a relative strength situation.
yeah.
You know, and I'm still kind of in that camp, to be honest with you.
I still think that continues.
Yeah.
Especially with all this, currency talk. So
Right.
we're basically we've broken above the daily bars on the S&P.
Right.
On the weekly bar, I think we probably get up to about the 68 to 75 level before we actually find some weekly resistance on the S&Ps. On the S&P futures. So
Right.
I think anytime there's a lot of problems around the world, then people are going to be flocking more into U.S. bonds and stocks and currency.
That's what I was going to say. I think you hit that on the head right then. I mean, this is kind of more of a safety situation than anything else. But technically speaking, we've been watching this breakout and the retest to the tick on Friday. I mean,
yeah, that's right.
And I'm showing right now, Joey. I'm showing our weekly profile view here, and that 1975 area general neighborhood is really the kind of the top of the profile when it comes to maybe next targets on the upside here. And if the dollar, it's really wild that there's this fear out there right now, and there should be fear out there, and the S&Ps could squeeze somebody even a little bit harder even until they get to 1975, just based on
Yeah, that's right.
Maybe
and
not expected,
That's right. And let's see. Hold on a second. I'm just looking at Shanghai. Basically, for the last couple of days, Shanghai had today was mixed, but Shanghai had bounced because they got rid of the stock regulator.
Right. Yeah, I saw that.
Yeah. So they rallied the stock.
Read off his resume of what had happened in the last 12 months.
Yeah.
Pretty amazing. Hey, Joey,
that's not his fault.
Hang on. We'll come back from break. Is that cool?
Okay. Yeah, I'll be on.
Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show, and we've got Joey Jong still with us from Hong Kong, in now my neck of the woods. Joey, you still there?
That's right. Yeah.
Hey man. Hey, listen, can we go back to currencies for just a second?
Absolutely.
Okay, yeah, because I think this is kind of going to run the show here, as far as a lot of people's MOs today. I'm showing the Japanese yen again, the Japanese yen USD cross. And what you said before is really, really important. This 112.43.44 area, as you can see, folks, we hit that down here. Might be a little bit of support on this, and especially with the dollar, kind of looking a little bit stronger. That's just something Joey just talked about. Just wanted to reiterate it. And also wanted to go to the pound, Joey. And one of the cool things I wanted to show people really quick, I'd love to hear your comments on it, is when we go into the scanner and we look at this action here, and I'm showing the GBP USD.
The pound has basically broken down across the board, across all currencies, basically. So if you look at the pound versus and basically any of the currencies, it's already broken down, through the dailies, right, and sometimes through the weeklies as well.
Right. Yeah, it's a sea of red. If you look at this block here, starting from GPB AUD down into GPB USD, it's basically a 6x4 cell, 24 cells of red. There's one exception there. So, I guess what I wanted to point out, Joey, is for guys out there, and we talk about this all the time, you and I do, for guys out there who are looking to try to nibble and trade against a trend and things like that, there's like zero green shoots here, I mean. No,
you don't want to be anywhere near
and there's no inflection points. There's no inflection points. There's no bottoms, tops, anything like that.
No.
And, try not to be a hero with this thing right now. I mean, they could shave quite a bit of market value off of this currency pair here. And, these currencies, Joey, if you want to speak about some currency moves, feel free to, because I know you've been in the middle of some just,
it's through a lot of hairy moves. The sterling here, you're really playing probabilities, and there's and yes, there is a chance that they come out and say no, we're not exiting, and then this whole thing kind of reverses and everything. But if you're just looking at the charts and looking at the probabilities, it's broken through some major technical support, and the probabilities tell me that there is a stronger possibility of this thing going down and breaking down and going straight down than this thing reversing. So you're always playing probabilities. It's never 100%. But right now the probabilities tell me that it's better to be short than long. And if I'm long, I'm going to be cutting that position at least to a neutral position, if not going short. So,
Right.
So that's the probability trade on the sterling. On the yen, because we've bounced off some very strong support at 112.43. If you look at the Nikkei has had massive move down. We're actually back to last October 2014 lows. So we're actually we could be bouncing off some pretty good support down there. So again, the probability trade on the Nikkei could be that we have a bounce, in the next few trading sessions, and because it's gone down so much, we could get a pretty powerful bounce.
Right. And you think that would bode well?
And we're going back 2-year supports, so
Right.
or at least 1.5-year support levels. And so, that most people aren't looking at that, and they're just seeing that it's broken down through the 1-year support. But if you go back a little bit further, we actually have a support area around here, and plus it coincides with the dollar-yen support. So, if the dollar gets some traction because of all this talk about, the British pound, that's actually positive for perhaps a Nikkei bounce as well.
Right. I want to talk about 3 more things if I can get your thoughts on these. I want to talk about crude oil, and take a minute and tell me what your thoughts are on crude oil, and have we seen a kind of a stake in the ground on the bottom here, or are we headed lower?
Well, crude oil is very interesting because back in 2002 to 2009, we had the 2 bottoms, and that was exactly a 7-year cycle. We again have another 7-year cycle, which really corresponds to a low being put in 2016, and the 2009 bottom went through the 2002 bottom as well, and then it screamed back. So we're really looking for, I'm not looking to be the hero and start a short position here. If anybody hasn't made their money on the short side already, then you should not be in this trade. What I would really look to do is, look for that reversal, look for some new boxes to appear on the 240s and the dailies, on the TAS bars. If we get some kind of a sign of a reversal, I'd like to play that reversal, because that, we've gone down a lot, and we're looking at another 7-year cycle, just like the 2002 to 2009 cycle. So, this is actually looking quite good.
Cool. All right. So I'm a big fan of that. What you just said. Let's also take a look at one more thing. Let's take a look at where you at on the notes right now. I mean, you find it kind of odd that they're just kind of hanging in there right now and not really wanting to come off at all with the market going straight north, or like, what are your thoughts there?
I think there's some money coming into the dollar, and that could be it. The other thing is, China. There hasn't been much talk, but last month China's debt, state debt, basically they've released a lot of liquidity to the local banks, because the local banks have had so much bad debt. I think the government is really coming in to try to save that. So unlike the global financial crisis, a lot of the debt in China is really off balance sheet completely off balance sheet. So much so that a lot of it isn't even, it's not well documented. Okay, so a lot of it is, I'm putting it very nicely.
It's not well documented.
I'm putting it very nicely. So, the global financial crisis happened very quickly because people can figure out, okay, this is how much I'm losing. But in China, nobody really knows, and there's been a huge rush of debt coming on.
Hey, look, man, it's been great having you on today, and I know we're going to pick it up later.
Okay.
Okay, but thanks very much. We'll be right back, guys.
Okay.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. And it was really great to have Steve and Joey on with us. We are looking at the S&Ps again, and I never really finished the answer to the question. Where are we headed now in the S&Ps? I mean, I obviously like this action. Joey talked about that 1975 area, which I'm a big fan of that being, at least somewhat of a lid on this. We're up pretty significantly this morning. There's that 1975 unfair high on the weekly profile, but the answer to the question for today really is, we've got to kind of look at the 240 kind of regulator of the trade up. And we talked about the ultimate retest of that 1898 area was going to be the powerful one. So he kind of we're looking at this 1911 and a half, 1912, the 1898. Now we've got to pay attention to this 1931.50, which we looked at before. I honestly believe this could actually be used as support to squeeze some people higher. You can orient some stops around, if you guys are day trading, you can orient some stops around this 1931.50. If we get below there, I'm not exactly that excited about shorting this thing. So it's kind of going to be a no man's land situation down here. And obviously there's some decent support at 1911.50. I don't think we'll revisit that 1898 at all. And I think we're just going to kind of drift around higher, is my opinion. You got the dollar in your favor. You got Shanghai kind of blowing a gasket here. The market's going to obviously love that. There is some unsettling news out there in the currency world, but the market and gold, to be honest with you, is kind of shrugging all this off. And like Joey talked about, U.S. Treasuries and U.S. markets, this has been the relative strength trade when it comes to indices. And we've been looking at that, and I've been kind of sticking my neck out all along going, you know what? It should be a lot worse. You look at this relative to other things going on, people are going to notice the same thing. And when it comes to that type of situation, you're going to get these kind of moves like, okay, you know what, the shorts are going to have to start covering, and this is the place they're going to start allocating money, and they have been doing that. And, I think that's borne out in the numbers before this even happened. So, guys, that's my take on the S&Ps right now. I know you guys that are short don't want to hear that, but again, we've been trying to play the relative look around the globe trade on this, and I think it's the writing's on the wall with it, basically. Let's take a look. Let's just go back down to the XLE really quick. I just wanted to revisit this. All right. So pre-market, we're trading 57.87. So this is where we're at. We're kind of up above this unfair high around this 56.72. I'm going to go back to the scanner. We got about a minute left, or even less than a minute. And we're going to go back to my ETF section here, and we're going to go back to the XLE. We're going to hit this really quick. And wow, the gang of 6 now. But, we're going to take a look at some of these oil stocks. Again, this is the boring trade, but it's, it's kind of like that Garrett Morris saying, been very, very good to me. If you just kind of stay on the wavelength of looking at some of these, here's EQT Corp. Again, nothing real painful. And here's your weekly situation. Again, I think this thing could have some legs and at least get back up into 67.91. Again, the cool good news is you know where to orient your stops around these particular stocks. Here's Cameron International, starts showing itself again. Got a nice weekly unfair high to lean on, 65.19 on CAM. And I hear the music. I think Larry's next, if he's not asleep. I hope Larry's awake right now. I think he's going to be with you. Thanks, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.